Hi guys, welcome back to Be Rich. News cycles are getting so short nowadays that I talk about it and the video comes out the same day. It looks stale. I guess I'm glad I'm in value investing business because in value investing business, news can be stale. It's all right because most of the time it's just noise. Like today, oil is down, gold is down. Trump announced a ceasefire timeline between Israel and Iran while Iran continues to bomb Israel. And Israel says they have broken the agreement for the ceasefire. Market initially was holding its breath. Then it started rallying. Iran fired 19 missiles at Qatar, at an American airbase. But then we found out they were very courteous to call up Trump and say, "Sir, we are sending 19 missiles with affection from us. Please be careful." And Trump said he was very grateful that the Iranians were kind enough to warn him ahead of time. And then the Israelis came out claiming that there's no point bombing Frodo because the Iranians the day before had taken all the uranium out of that place, the stockpile, and the place was pretty much empty. So, I don't know. So, I don't know. So, to be honest, sometimes I don't know if you're watching some kind of Hollywood movie and like a very badly written James Bond movie, or if this is the actual reality we're looking at. Basically, no one has a clue. I mean, honest to God, nobody has a clue. So, what does this mean for us as investors? The world index, MSCI index is up almost a quarter point. Futures, US futures is up as I'm recording this. The Nasdaq is up. Asian markets, some of them close in percentage point up. And Taco Trump seems to be doing what he's famous for. And the investors seem to be really tired of Trump's cycles of panic and then pull back. Market seems more and more desensitized to all this news, and that is quite scary. Because first time it really shocked, and all of us reacted. Now it's the 10th time, and we're like, yeah, whatever, man. And that seems to be the market's kind of frame of mind right now. And what do you get out of all this? You get a very bullish outcome, and though it's temporary, ceasefire, oil prices down, so you do expect market to spike because inflation is also going to be down. To be very honest, Iran has very limited options from where they're sitting. The only thing they can really do is do talks. I don't think there'll be more talks and less bombs from here on. And whatever happens in the negotiation between Iran, US, and Israel, whatever happens, as far as the market concerns, a net positive for the market. Because safe havens are cooling off. That's why I said gold is down. And even the yield, the 10-year US Treasury yield is back to ticking up. That means people who went running to the yield for security now are like, there's no need to worry now. So they're getting rid of that and putting money back into the market. So from here, market will probably move up. Peace holds. This market will move up out of habit. I wouldn't say because of conviction, because of just sheer habit, it'll move up. And what we need to be is consistent, and we need to be calm. That's why I said on the onset, as a value investor, the news can be very stale because most of it is just noise. There's no room for bravery, there's no room for fear, there's only room for consistency. You have to be consistent and you have to focus on what you understand, stick to the process, keep sipping that coffee and move on. Anyway, that is briefly what has been happening in the world. Today I want to talk about big tech and big pharma and how they adjust their books. Not books. Books is a little harsh. I would say they adjust their profits and why it matters. Something that Oracle does, Intel does, AbbVie does, Apple even does it. It's quite common in the US. And I thought we should talk about this. Because when they report all their reports, they don't just give one version. There are two versions of this. And the second one, you can call it creative, if you want to call it creative. 71% of the S&P 500 companies do it. Okay, they present this sweeter version by showing the numbers in a much better light. And we as investors need to know this, especially as value investors. The first one is called GAAP. That's why I say mind your GAAP, GAAP. The second one is non-GAAP, of course. And what's GAAP? GAAP is standardized, recognized by the SEC, right? Based on some accounting principles which have been set. These are the rules everyone has to follow. They have to show the numbers like this. So as an investor, the numbers when it's presented to you, it is presented through a certain template. So you can use that to compare the past, the present, compare peers. It's very useful. So that's why GAAP is there. Then you have the non-GAAP, which is adjusted earnings. They don't include something like stock-based comps. They don't include amortization, restructuring costs, whatever they feel like it. You can throw in sprinkle as a famous base sprinkle that happens. It used to be an exception, was meant for an exceptional reason to give a non-GAAP report. But now, because you're allowed to move it around and adjust it in your way you want, it's become the norm, and it's quite widespread. You'll be surprised how widespread it is. Out of 500 companies in the S&P 500, 351 follow this. So 89% of them have taken their numbers and made it look better. And that's quite an alarming number. For instance, the GAAP loss of Intel was $19.2 billion. The non-GAAP version of the same report showed their loss at $0.6 billion. That's like a huge factor. If you understand how big a billion is, from 19.2 billion loss, they said, no, our loss is actually only 0.6 billion. Why would they do this? We investors reward growth. We always look at earnings. That's why they say we have baked future earnings of NVIDIA into the stock price. That's why it justifies the stock price. So we investors, not only we are taking the current earnings report, and we project based on that on future earnings, and we're baking that into the price, we're willing to pay for future earnings. So you can realize why companies would start fudging these numbers, not fudging, would start glorifying these numbers and showing them in a very flattering light, as they say. Stock-based compensation is a huge exclusion. Pressure from investors, like I said, to beat the estimates. Estimates are set by analysts, and they're trying to beat that, and investors keep looking at that. The pressure is there. So we have all admitted to using GAAP. Is it illegal? No, it's perfectly legal. And who are famous for this? Broadcom, they adjusted $17 billion. Abvim, they adjusted $13.7 billion. Well, Bristol Myers, they took a minus $9 billion and they made it a positive $2.3 billion. So this happens. And it's not, like I said, illegal. It's completely legal. It's absolutely fair what they're doing. As anyone does, you want to take your product or whatever you're selling, your company, same way, you make your product, you showcase it, and you keep it in perfect lighting, and you get the right brand ambassadors to push the product and to push it into the consumer's mind. Same way companies take and they polish themselves up, dress themselves up, and try to present the best face to the investor. As we as investors should realize that is only one face, and it's a responsibility on us to see both faces and to see the reality of the situation. So you should want the cleanest narratives and not some messy truths, because it is true, whatever reports they're presenting. It's not factually incorrect. It's just the way they're showing it. Because it can be dangerous to rely on just on a non-GAAP. A lot of us do this because we tend to rely on the non-GAAP, and we get into trouble. It's like looking at a car which is being sold and look at the mileage it's supposed to give. And just based on the advertised mileage, we say we fill the tank and we start driving, assuming it's going to give that mileage, and it's not true, because that mileage is calculated on a certain set parameters, right? So you won't do that as a driver. Same way as an investor, you should not just do that. You take the GAAP, you read it, and take the non-GAAP, read it, but then you should see the truth for what it is. That means it's on you to stick to cash flows, not just the EPS. Use GAAP to anchor your valuations and understand what is being adjusted and why it's being adjusted, most importantly, because sometimes the reason for adjusting could be, like I said, exceptional circumstances. So it could be that exceptional circumstance. So understand why. And that's the main reason why SEC is not clamping down on this, because it is legally allowed to showcase yourself. It's like, advertising yourself. Of course, some of it is very creative cooking. Even Gordon Ramsay would be very proud of it. Master Chef style, very Master Chefy, some of the cookings. But remember, it is on you as investors to pay attention to this. So this is what I wanted to tell you. There's lots of noise. So even if you filter out all the geopolitical noise, all the, macro news noise, even in a company level, there is lots of noise. And you need to learn how to filter this noise. Even in a place where there are rigid rules, like in the United States, where there's a rule of law, certain things are allowed, It is part of capitalism, where you're allowed to dress yourself up. So you've got to be, as an investor, especially as a value investor, looking to invest into a business for the long term, You should pay attention to this. Anyway, this is the news I had for you, which I wanted to share with you. Most of the comments which I saw today were all related to Iran, Israel, and all what's happening, which, like I said on the onset, this news cycle becomes very stale. By the time I'm recording this video and you guys see it, so much more has happened in panic and cool off and not panic. So I really don't know where that news cycle is going to go and take us. All we can do, like I said, is, be consistent. No need to be brave, no need to be fearful. Be consistent, have your cup of coffee, and then move on to whatever you need to do and wherever you need to do. Don't sit and fixate on your portfolio. Don't fixate on company news. Don't fixate on anything other than being consistent and moving on. Thanks for watching the video as always. Tomorrow, hopefully, all of this would have died down and I have some interesting views on what Apple is trying to do, and I'll talk about that. If there's anything specific you guys want me to talk about in terms of company or any industry or sector news, put it down. Let's not do the same old stuff. Let's try to keep it fresh, and let's talk about something different so it keeps you interested, and of course keeps me interested in researching about it and coming back to you guys. Thanks for watching Be Rich today. It's been wonderful having you here with me this evening. See you again tomorrow and have a great evening.